like 1% of my portfolios.
But do you think you should have more? We keep watching.
But I think I've said the same thing over and over again about Bitcoin. I think
in a new CNBC interview, billionaire hedge fund manager Ray Dalio shared his updated view on Bitcoin, the stock market, and the current bubble environment. Dalio confirmed that he still holds Bitcoin, but remains skeptical about its long-term role as a reserve asset for major nations. He also outlined how close the market is to historical bubble extremes.
I have a small percentage of Bitcoin I've had for forever, like 1% of my portfolios.
But do you think you should have more? We keep watching.
But I think I've said the same thing over and over again about Bitcoin. I think the problem of Bitcoin is it's not going to be a reserve currency for major countries because it can be tracked and it could be conceivably with quantum computing controlled, hacked, and so on and so forth.
On equities, Dalio estimates the U.S. stock market is roughly 80% of the way toward the peak bubble conditions seen in 1929 and the early 2000s. He noted that elevated valuations historically lead to poor forward returns, referencing data showing that when the market trades above a price-to-earnings ratio of 23, 10-year annualized returns tend to hover around zero. Still, he cautioned that bubbles can stretch far longer than expected. He stressed that trying to call the exact top of a bubble is a losing game. Even legendary investors have failed at it. Charles Merrill, founder of Merrill Lynch, warned about excessive speculation in 1928, more than a year before the market finally peaked. His caution was correct, but his timing was far too early, and the market kept rising nearly 90% before it collapsed. Dalio's point is that bubbles can stretch, and they often punish anyone who assumes they must pop immediately. Instead of panic selling, Dalio advises focusing on balance and diversification. He views cash and gold as effective hedges, noting that gold remains the world's second-largest reserve asset, and historically performs well during periods of debt stress or currency debasement. He believes reliance on overvalued equities creates unnecessary fragility, and encourages investors to hold a broader mix of assets, with low or negative correlations to equities.